Good morning. It's January the 22nd, 2016, and we awaken this morning to equity markets around the globe up, and I mean up. Asia collectively is up 10% plus. Europe collectively up 7.5%. Price of crude oil jumped from $29.56 on yesterday's last price take to meet at $31.08. So good times are coming. Price of crude oil is higher. Stock markets are higher. The usual culprits are given credit for stock market rallies, crude prices, and the economies are so bad around the globe that more economic stimulus has to come. And we will see if that actually happens. So what's been driving stock market prices since March of 2009 is government intervention to support the economies. The United States, is pretty well accepted right now that no more interest rate increases are coming, at least for a while. The projected March interest rate increase has now been tabled as far as prognosticators are concerned. So we have equity price, like we said, if the E-mini's up, we should be down. We have triple distribution lower. If you look at the London split right here, new distribution down, and we got a very clean break in the market. So structurally the sell is a resting limit sell at 128.11. We have option expiration today based on yesterday's activity. 28.16 to 129 even is where yesterday's option trade ended up. They probably didn't foresee a strong stock market rally overnight. So this will come in and it'll play too. So I'm guessing we're going to be a little bit lower given the distributions down and the fact the stock market should open and try to trade higher this morning on a short squeeze. So we've got 27.29, 28.01 for buy one. Looking for a mathematical close today at 16. The sell is 8 to 12. Preferred sell would be 11 or better, then 15 to 19. I'm going to put a question mark at 04. I think they'll get stops below the overnight session low, but I do think we're headed lower. So 29 to 01 and then 21 to 25 for buy two. We do have some news this morning. We've got Chicago Fed National Activity Index minus 30 last month. Could come in lower. Flash PMI 51 could come in lower. Existing home sales 5.2 million could come in lower. And LAI at minus a tenth could come in lower. And finally, Baker Hughes rig count. Don't know what the count is, but it seems to have stabilized. I mean, you gotta go out, and last week it was at 877. And there you have it. That's today's news and our guess on where the 10-year is going to trade. Okay, mathematically on the 30-year, the option action yesterday favors a close between 159 and 160, and you can see we're at 158.16. We've got a high volume number down at 158. That is the draw, the attractor. We've got this low over here at 158.01. We are pointed lower, so structurally, if you want to see where the clean break in the market is, we've got this W high right here. We've got this K period low, so the break's at 29. That's a ways away. We're at 17. We've got a high volume number at 20. We've got the mean at 24. We're currently at 17, so I'd like to sell 23s to 27s. May take a 19 to get in. Depends on what happens early in the stock market. But we're going to play for higher. And then we're going to play for 31 to 03 for sell 2. Buy side, think we're headed a little bit lower. As volatile as this is, we're going to put 5 to 9 buy 1. This high volume number down at the buck, 1 to 29 buy 2. And we're going to put a question mark at 13. Everything's pointed lower. I think we can get it. Gold's off a bit, but not a lot, because of the strength in the stock market. And again, I just don't think you have people falling over themselves to be short gold. The retail account is there. So we had a 90 to 95 buy last night when we came in, and it held up pretty well. So 96, 94 buy 1, and then 91, 89 buy 2. On the sell side, 11 to 1102 sell 1, 4 to 6 sell 2. Okay, yesterday China officially pegged the yuan at unchanged. They didn't do anything overnight that I could find. Draghi spoke saying the euro is headed lower. Interest rates are headed lower, even more negative than they are now. Sell the euro. So I think that's where we find ourselves. So we're at 29.5. Put our first buy at 108 even. $7.75 for buy 2. On the sell side, I'd say 45, 55 sell 1, and then 75 sell 2. Okay, crude. I've been through this a lot, and I've had to sit, and prices can stay low for a very long period of time. But we're going to be starting to look at the commitment of traders and see how the composition of the long-term hedgers, speculators, see if that changes. And we'll be looking at the speculator because they're the ones that are going to drive the market. In the long-term hedger in crude oil, you also have refineries that buy supply based on today's price, and that supply doesn't hit the pumps for 60 to 90 days. So the speculator, if the speculator is not willing to add to their shorts and build those, then we're probably in the bottoming process in crude. Right now resistance is at 31.25, so 31.25, 31.50 sell 1, 32 plus or minus sell 2. On the buy side, London's low was 50, so 25 to 50 buy 1, and then 29.75, 30 buy 2. Okay, 32 is the cleanest break in the market, so a structural sell against 32 I think is the best trade that we see this morning. And again, nobody's changed their mind about the market being oversupplied or the impact of Iranian oil, which officially can be sold now. Don't you love it that not only did we give them back their 100 to 150 billion bucks, we paid interest on it. And you know, what do we get out of that? We pay $1.7 billion in interest, and they keep 2 prisoners of ours. I mean, I would love to be put in a situation especially if I were a bad guy, to go negotiate with this government, this administration right now. I mean, they give it all away and get nothing in return. And that's why we're the laughing stock of the world, and I wouldn't trust the United States to do anything with their word or anything else. Okay, stops above the overnight session high right here. 1900 is a pretty round number, so I'd like to sell 95, have 1900 tested, and it holds, so that's going to be sell 1. Then we're back to our 7 to 10. Then our other sell will be 7 to 10. Get through that, it's going to be pretty easy to get up to 20. On the buy side, London's low is 78, so 75 to 80 is buy 1. May take an 85 to get in. They make us pay up on the long side to come in early, but we'll 75's pretty clean break in the market. Last rotate down, and H&I was right there, and then 65 to 70. I think we're going to trade a little higher. Tom DeMark said 1894 to 1955 is the sell zone, so we'll see how well Tom's stuff holds up this morning. He was the rage back in the late 90s, 2000, with his technical analysis take on the markets. Had a hot hand for a while, but talk about complicated and damn near impossible to explain. He's not quite where the Elliott wave is, but he's close in my opinion. And again, I less is more. I just, the market's going up high, crude's higher, or whatever, and a 5-period, 10-period moving averages makes more sense to me because it's not optimized. Now that could be my downfall at times too. So, but I just think when you look at it and you get playing, the more we add to our checklist, the more that we look at. Every piece of information has its place, but probably not today. Certain pieces of information have their place today. Okay, it's going to take a bit to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.